Welcome to our presentation on P2P lending and Fintech, where we explore how peer-to-peer platforms are reshaping finance through digital innovation, greater access, and new lending models. Over the next slides, we'll walk through the fundamentals, market dynamics, benefits, risks, regulatory issues, technology trends, case studies, and future opportunities, giving you a clear, practical view of this evolving space. This slide outlines the presentation roadmap, so you know what to expect. We'll start with an introduction to P2P lending, then examine the market landscape and emerging trends, look at the benefits and challenges, cover regulation and technology, review case studies, and finish with future outlook and opportunities for stakeholders. Now we begin the introduction section, setting the scene for P2P lending. I'll explain the core idea, why it matters today, and what makes it different from traditional banking, so you can follow how platforms connect borrowers and lenders more directly, reduce friction, and enable new forms of financing enabled by digital tools and data. Peer-to-peer lending is an online model that links individual borrowers with investors through digital platforms, bypassing traditional bank intermediation to offer faster, often cheaper loans. It grew from informal networks in the early 2000s into a tech-driven market where platforms play the intermediary role, facilitating matches, managing risk, and expanding access across diverse borrower segments. Here's how P2P lending typically works. Borrowers apply on a platform, automated underwriting and credit tools assess risk, and investors fund loans either directly or through pooled products. Technology speeds matching, pricing, and repayments. And compared with banks, this model offers greater accessibility and often lower costs, while also requiring robust risk controls and transparency to build trust. Let's shift to the market landscape and trends, where we'll look at global growth patterns, regional differences, and the newest trends driving P2P lending adoption, so you can understand where the market is headed and which forces are shaping future opportunities. The global P2P lending market has seen rapid expansion, driven by digital adoption and demand for alternative finance, with Asia-Pacific leading growth, North America offering maturity, and Europe navigating regulatory constraints. Key drivers include smartphone penetration, improved credit technologies, and regulatory support where present, all contributing to strong market momentum and diversified regional opportunities. Several emerging trends are reshaping P2P lending: integration with AI and big data for smarter credit assessment, rapid expansion of mobile platforms that boost accessibility and engagement, and alternative credit scoring using new data sources to include underserved borrowers. The slide visuals highlight these trends and how they improve risk prediction and platform efficiency. Now we move into benefits and challenges to provide a balanced view of what makes P2P lending attractive and where risks remain, so you can weigh the opportunities against the practical hurdles platforms and participants face. P2P lending brings clear advantages. It enhances borrower access through faster approvals and fewer gatekeepers, offers potentially attractive returns to investors by bypassing banks, and reduces costs through automation and streamlined processes. The illustration emphasizes improved access and efficiency, while reminding us that higher returns often come with higher risk that needs active management. On the risk side, P2P lending faces significant challenges, including credit risk and potential defaults that impact investor returns, complex regulatory and compliance demands across jurisdictions, and increasing market competition that pressures margins and borrower quality. Platforms must invest in strong credit models, compliance infrastructure, and differentiation strategies to remain sustainable. Turning to the regulatory environment, this section explains how different regions approach P2P lending, why regulation matters for trust and growth, and how balanced policies can support innovation while protecting consumers and investors. Regulatory frameworks vary widely, Developed markets typically enforce strict rules around investor protection, licensing, and transparency, while emerging markets may adopt phased, adaptable approaches to balance innovation and risk. Overall, thoughtful regulation can build consumer trust, but may also slow rapid expansion. So policymakers and platforms must find constructive, balanced approaches. Compliance and legal challenges are central for P2P platforms. They must obtain appropriate licenses, adhere to operational and anti-money laundering requirements, comply with consumer protection laws, and implement strong data privacy and security measures to safeguard user information and maintain regulatory compliance, as illustrated on the slide. Next, we explore the role of technology in P2P lending, highlighting the platforms, infrastructure, and innovations that power lending activity, improve decision-making, and protect users, setting the stage for deeper tech topics on the following slides. Digital platforms rely on advanced software and automation to streamline loan processing, risk assessment, and borrower-lender matching, while blockchain can add transparency and smart contracts for secure settlement. And robust cybersecurity measures are essential to protect transactions and user data, as shown in the three-box visual. Looking ahead at innovations shaping the future, AI-driven credit scoring, smart contracts for automated loan management, and advanced data analytics for market insights are transforming how platforms underwrite loans, reduce defaults, and personalize lending products, enabling more efficient, scalable, and transparent P2P lending ecosystems. Now we'll review case studies and success stories to see how real platforms have scaled, what strategies worked, and what lessons others can apply, helping to ground the theory in practical examples and outcomes. Successful P2P platforms have grown by combining diversified loan products, strong risk assessment models, user-friendly interfaces, and transparent policies. Many scaled through effective investor communication, low fees, and robust compliance, demonstrating that trust, technology, and clear business models are key to long-term success in competitive fintech markets. Platforms still face headwinds. Addressing loan default issues requires diversified borrower pools, AI-driven risk models, and active collection strategies. Navigating regulatory changes means staying agile, investing in compliance, and engaging with policymakers. Adapting to market shifts calls for product diversification and data-driven responsiveness, all highlighted in the three challenge boxes on this slide. Finally, the Future Outlook and Opportunities slide prepares us to think strategically about growth potential, new segments, and how stakeholders can capture value as P2P lending matures and technology continues to advance. Long-term projections point to steady growth driven by digital adoption, clearer regulation, and increased investor confidence. P2P lending is likely to expand into underserved segments like small businesses and green financing, while emerging technologies like AI and blockchain will further boost risk assessment, security, and market reach. There are meaningful opportunities for different stakeholders. Investors can access diversified portfolios and new yield sources. Borrowers and SMEs gain improved access to affordable credit that supports growth. And fintech innovators can develop AI, blockchain, and analytics solutions to enhance platform security, personalization, and scalability across the P2P ecosystem. Thank you for joining this overview of P2P lending in fintech. We've covered the model, market trends, benefits and risks, regulatory and technology landscapes, and future opportunities. And I hope this gives you a clear framework to evaluate or engage with P2P platforms going forward.